Hi guys. So sorry guys. We do apologize. Sorry guys. We do have some technical we do have some technical we do have some I will be just take we do have some I will be just for a while for the we do have some I will be just for a while for the we do have some I will be just for a while for the we do have some I will be just for a while for the we do have some I will be just for a while for the we do have some do you let me know if you let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again let's have some do you let me know again.
Stream. Oh, okay, now again. Hello, hello, testing. One, two, three. Is it? How's the audio now? Sound check. Hi everyone. Is it much better now, or is there still a lot of feedback? Oh, disconnected from the chat also. Shit. End stream. Oh, okay, now again. Hello, hello, testing. Is it better? Sound. Okay, one, I two, have. Three. Is it? How's the audio now? Replies. Some of you are saying it's better. Some it's not. How is it now? Sound check. Hi everyone. Is it much better now, or is there still a lot of feedback? There was some connection issues earlier, but I think we sort of resolved it. Just want to make sure you guys can see the screen as well as the audio. Is the audio better now? Okay, it sounds fine here. Okay, thank you, Richard. All right, thank you, Samuel. Thanks, Jack. Okay, sorry, some minor technical issues. Okay, now that we've gotten that all resolved. Okay, so let's start with today's okay, live analysis. Hello, hello, testing. Is it better? Sound. Okay, I have. Is it? How's the audio now? Replies. Some of you are saying it's better. Some it's not. Today. So my name is. How is it now? Ketan Ramachandra. So I and together with Peggy, so we're just covering for Cassandra today. So is it much better now, or is there still a lot of feedback? There was some and connection issues earlier, but I think we sort of resolved it. Just want to make sure you guys can see the screen as well as the audio. Is the audio better now? Okay, it sounds fine here. Okay, thank you, Richard. All right, thank you, Samuel. Thanks, Jack. Okay, sorry, some minor technical issues. Okay, now that we've gotten that all resolved. Okay, so let's start with today's live analysis. Hello, testing. Is it better? Sound? Okay, I have. Is it? How's the audio now? So just before replies, some of you are saying it's better, some it's not good today. So my name is. How is it now? Ketan Ramachandra. Highlight the disclaimer as well. So please take note together with Peggy. So we sound check. That is presented Cassandra today on the slides. So is it much better now, or is it still a trading view? There was purely for educational purposes, and it's just I think we sort of resolved it. Just want to make sure it does you guys can see the screen or construe as any investment advice. And also, please take note the audio better now of the risk warning as well. Fine here. Okay, thank you, Richard. Complex thank you, Samuel. Thanks, Jack. Okay, sorry. High leverage and some minor technical issues. Okay, now that we've gotten that all resolved. Okay, so let's start with today's your capital quite rapidly. Okay, live analysis. Hello, testing. Is it better? Sound? Okay, I have. Is it? How's the audio now? So just before replies, some of you are saying it's better, some it's not good today. So my name is. How is it now? Ketan Ramachandra. Highlight the disclaimer as well. So please take note together with Peggy. So we sound check. That is presented today on the slides. So is it better now? Do you still get? Do you guys still have the feedback? Is it better? Okay, I'm not sure what seems to be the issue today with regards to the audio. Checks. Okay, let me see if I can try and improve it. Right. Do you guys still hear the feedback? Okay, okay, that seems okay. Sorry. Okay, I'll just try and continue. Hopefully, the audios will sort itself out. But yeah, we'll definitely take note of this. Take note of this moving forward. Okay, so we just yeah, just have to put up this disclaimer as well. Okay, so now we can move on to the live trading analysis. Okay, hi. Okay, so okay, if there's any requests for any particular instrument or commodity that you would like me to analyze, please drop your messages here. All right, in the live chat. Otherwise, let's see what's going on. Okay, so do take note. U.S. markets are closed for Memorial Day, and it's also a bank holiday in the UK as well. So generally, there'll be a lighter trading volume for the rest of today's session, right? On Monday. So with U.S. markets not coming online, expect lower trading volume, and we might not see that much movement in price action later on today. Okay, so right. Okay, so we've had some good news surrounding the U.S. debt ceiling, negotiations for the U.S. debt ceiling. So they have a tentative deal, which is on the table, which is now needs to be passed through to the House, I believe, or Congress, and then finally, once it's approved, it'll be sent up to President Joe Biden for him to sign off on the deal. So hopefully uh, that tentative deal is formalized, and we can get that uncertainty out of the way, and we can focus on other factors for the market. Okay, okay. Samuel, he's has a request for gold, dollar yen and pound yen. Okay, so let's kick things off with that. Okay, so this is the price for our chart for gold. Okay, so as you can see, dollar has been rising very rapidly over the last 3 weeks, which is causing dollar index to rise, bond yields to rise, which is why we've seen this big pullback in the price of gold. Okay, so as of now, currently we have we have the first support at 1936. It's an overlap support that goes all the way back to, or not all the way back, but goes back a few months to 15th of March. Okay, then the first resistance, overlap resistance, is coming in at around 1950. All right, so $1,950 an ounce. Support is at 1,937. So we've done the Fibonacci retracement on this leg of the move, downward leg of the move. So we can expect some intermediate resistance at the level of 23.6% Fibonacci, right? So this would be our intermediate resistance for today. So let's just zoom in a little bit. Okay, so this would be, so you can see earlier today price hit 1948 and it started pulling back. So this is key level for it to break before moving up to the first resistance. Okay, so with US dollar rising rapidly over the last 3 weeks, I think there's bound to be some profit taking that comes into play. So potentially today, earlier on in the session, there earlier on in during Asia trading hours, there was some profit taking in the US dollar going on. So we saw the dollar index fall as well, uh, going from 104.25 to as low as 104.05. But prices have since rebounded off this channel. So you can see here we have a nice ascending channel on the dollar index. This is a 4-hour chart again. So what was the previously a first resistance is now acting as a first support. And price has also just very nicely touched the lower range of the channel, the lower trend line of the channel, and bounced up quite nicely. So all dollar still looks relatively strong, and because of that, we are likely to see gold price move lower for the rest of today as well. So just take note of that. Dollar is still pretty strong, and it's bounced, and as you can see, technically it has bounced very nicely off the ascending channel, and it's sitting above this first resistance, which is what was previously the first resistance is now acting as a first support. So as you can see here, if you zoom out a little bit, from the 1st of March onwards, price has reacted off this level of 104.18 quite a few times. So it acted as a strong support in the past, and now it acted as a resistance recently before finally breaking out. All right. Okay. 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 So yeah. Okay. So going back to Samuel's question on gold. Yeah, so we can see the dollar has bounced off nicely. So I'm just going to change this to first support, and then we'll have the first resistance coming up here, and then this would naturally be the first support. This would be the second support. We can close this off, and here this would be we could say that's an intermediate support level as well. You can see price has bounced off this level, reacted on this level a few times, so we've got a intermediate support area as well. Okay, so do take note of that. The dollar index is still in a bullish trend despite pulling back slightly earlier this morning. It has actually started to move higher again. So do take note of this ascending channel on the dollar index. If it does break through this level and goes towards this intermediate support level of 103.90, then it's very likely gold prices are going to push higher as well. But for now, uh, gold does seem to be kept between 1936 and 1950. Okay, so this is for gold. Okay, dollar yen. Okay, similarly, dollar yen was pulling back a little bit today, and it's continued to do so. So in terms of resistance and support levels, so let's just update some of these levels now. Okay, naturally this is now our first resistance, and this level here would be our second support area. So I'll just remove this and turn this to our first support, and this would be our second support now on the 4-hour time frame. Alright, so let's just get rid of all these other horizontal support levels, and we can also do a Fibonacci retracement on dollar yen here. Okay, so we've got a nice upward move here going up. We might even have a channel. Let's just see. Let's just zoom in a little bit here and see if can we establish a channel. Yeah, price seems to have reacted off here a few times, so we do have a nice bullish channel as well. So as you can see, the first area of support for uh, dollar yen would be the lower trend line of the channel. So if it breaks through here, we may see price head towards the first support. What I also see is this price level here of 104.04. This looks like an intermediate support level, because if we zoom in a little bit, we can see price reacting here as a resistance previously, and then it managed to break out. So we do have a nice overlap support here that goes merges well with the lower trend line of the channel. So this area here around 140 would be the immediate support level for dollar yen. Just zoom out a bit. Okay, I'll just zoom back in. Right. So despite yeah, so there's no major change in trend yet for the dollar yen and the dollar index as well. They're both still in their bullish channel, although its prices are correcting a little bit today, which is typical in any market, right? Whether it's an uptrend or downtrend, there's definitely be bound to have a price correction as profit taking comes into play. So do take note that for dollar yen 140, the level of 140 together with this lower trend line or the channel is an important support area as well, right? And we have the first resistance at 104.90, and the next resistance level would probably be, let's see if there's any nice overlaps that we can see on the 4-hour chart. Probably somewhere around here we can see price react off here. So maybe just as a quick gauge of where the next second resistance level could potentially be would be at 141.54. Okay, in terms of Fibonacci retracements on this move, let's just pull up all the fibs to see if any of the retracement levels line up with any horizontal support levels. Okay, so as we can see, the 23% Fibonacci retracement level lines up pretty closely to this overlap support here. Okay, so we'll just, and all these are way too far below for now. So let's just keep 23% on. So this area, oh god, what happened? No, okay, sorry. There seems to be some major issues today. Okay, sorry. Okay, yeah, back on. Right. Okay, so where's my Fibonacci? Okay, wait. This is okay. Dollar yen. Yeah, sorry. So here I am back on dollar yen. Okay, so we have this bullish channel on it. We have also done the pull the Fibonacci retracement. So we can see that this horizontal overlap support at 139.40 lines up pretty closely with the 23.6% Fibonacci retracement level. So if it does break out of this channel here, as we've seen at 140, then of course the next move down will be all the way down to 100, 139 and 50. Yeah, but do take note that the overall trend for the dollar index is still in a bullish channel. So any correction could be a potential entry for the next leg up. Okay, and then we've also had Samuel asking for pound yen as well. Okay, let's pull up pound yen. Okay, just let me get rid of everything. Okay, let's just look on the daily chart first to see where we are exactly to get a sense of things. So I think okay, this is pretty okay. It's quite elevated based on historical levels, right? Level of 170 between 172 and 174. So what I can see immediately as an area of a first support level of first support would be somewhere around here. So we can highlight this as our first support level. I'm just going to do this on a daily chart and then we'll zoom in onto the 4-hour chart. So it's easier for us to have a it's important to have a top overview when doing your analysis. And I mean, having a top-down approach, I like to start like perhaps with the daily chart or even sometimes with a weekly chart. Start off with a top-down approach, and then once we've identified the support and resistance levels on these higher time frames, we can then zoom down into the lower time frames, such as the 4-hour chart or 1-hour chart, or even lower, depending on your trading strategy and preference. Okay, so this is how we are doing it for now. Okay, and as an immediate resistance, naturally, it would be this recent swing high. Okay, I don't see anything going back. Probably something here. Okay, probably as a next level up if we do see price breaking above. So this level. Okay, let me zoom in and see of 175.35 could potentially be the next second resistance level. Okay, um, and then okay, we've had some okay some form of, we'll come back to gold again, right? But we'll cover Nasdaq and WTI as well. Right, thanks Rick for the kind words. Yeah, so today we did have the reactions that we were expecting based on our pre-market analysis. Okay, so sorry, going back here, so we've identified the first and second resistance levels. We've got the first support here. We can also pull a Fibonacci retracement here. This leg looks pretty good. Okay, yep. Okay, let's just pull up all the fibs to see if we can highlight anything. Okay, we can see first off the bat, we can see 38.2% lining up nicely with this support area here, and also lines up relatively well with this resistance area. So this is the potentially the next key support area for pound yen. Okay, and then I think the other fibs we can just get rid of them. We'll just keep uh 23 and 38. Okay, so the next major support level, as you can see, it goes all the way back here. So what we are trying to look for is overlap areas when the past price has reacted off it, be it as a resistance or as a support, as we've seen recently here. Okay, so this is on a daily chart to get some idea, and this level at 23.6% did offer some resistance as well. So potentially this could be a support, the next sort of intermediate support if it were to break through the first barrier. Okay, so let's just zoom in onto the 4-hour chart. Okay, so pound yen. Okay, so here we're just looking at this part of the leg. So it has rejected off this first resistance level. So if pound yen was okay, maybe can we, is there a bullish channel here? We may be able to identify a bullish channel as well. I did see something here. Okay, we do have a potential area here. Okay, all right. So price is pulling back. We're still in the bullish channel for pound yen, at least on a daily chart. So the area where we have the first overlap support together with the rising uh, trend line channel line here, the bottom trend line. So we can see that 172.13 would definitely be a strong support area. So if price does indeed pull back to this around this level, and we expect a bullish uh, action to continue, this would potentially be a pretty decent entry point to go long again. As you can see, there's an overlap support uh, level that, oops, there was also previously a resistance level back in October of 2022. Okay, so let's just go on to the 4-hour chart and see that, yeah, you can see that the first support level where price had consolidated around this level for from since 17th of May roughly to about 25th of May, so for about a period of week, price was just uh, roughly consolidating above and below this level before finally breaking out. So it does have a significance, pretty important significance as a potential support level, right? So if you're going to be bullish on pound yen, potentially you could wait for it to retrace back down to this area of 172.10 before going long again, and you could identify, depending on your stop risk reward ratio, you could see that if you want something with a tighter stop, this could also be a potential level as well, right? I just put resistance here. So as you can see, price has reacted off this level a few times. So perhaps you could also place your stop loss level just slightly below this dotted resistance if you were to go long around this region of 172.10, right? Okay. Um, okay, there's pound yen. We'll go and have a quick look at Nasdaq and okay, sorry. Nasdaq and WTI. So expected with the debt ceiling, with the positive news coming out of White House today with regards to the tentative deal. So this will act as a major potential tailwind for the equity indices. The major indices are likely to move higher from here. The only thing to watch out for would be any fallout, right, from the debt uh, deal. So do take note, it is a tentative deal, and hopefully it can Congress will approve it, and we can get this uncertainty out of the way, and we can expect equity markets to move higher. Sorry. Okay, so let's just go on the daily chart. We can see the Nasdaq has rebounded very, very strongly since the start of the year, led by the heavyweight components such as Nvidia, of course, Meta as well. Right, Meta has probably gained almost 100% or more since its lows. Nvidia has gained almost 190 to 200% since its lows as well. So okay, so in terms of support levels, we see okay, it's quite okay. Let me just see where would the next resistance level be. Of course, this would be the immediate resistance here. But let me see if there's anything in terms of overlap support. Can we see any potential levels as well? So it's kind of a bit hard to find any good overlap levels here. Okay, so let's just leave that out for now. In terms of support, uh, this was previously a support area here, but this is pretty far. Okay, I'll just label this for now. Put it here, but this is generally too far. Let's see if we can identify a closer region for support level. Okay, this might be a decent level here. And also let's do a Fibonacci retracement on this leg of the move. Let's see if this is a pretty clean move up. Okay, generally this is pretty alright, because when we do a Fibonacci retracement, we would like to see the price action of the candles moved relatively close to the trend line here. We don't want too much deviation away from the trend line, so generally this looks pretty decent. So okay, so this is on the daily chart. So we have identified the support levels here at 13,875, which lines up pretty closely to the 23.6% Fibonacci retracement. So this would be the next level of course, you could also say since it gapped up, right? Since we had prices gap up this morning, you could obviously put this as the first support as well. Whether will Nasdaq close the gap first before bouncing higher, we'll find out by probably tomorrow. When there might be not much activity later on today. As we know, U.S. markets are closed for Memorial Day, but we still have futures. I believe futures will be trading as well, but probably on shorter trading hours as well for shorter duration. Okay, so let's zoom in onto the 4-hour chart. Okay, so in the 4-hour chart, we can also do a Fibonacci retracement on this leg of the move here. You see, this is a nice move, so we can identify uh, other support levels on a slightly lower time frame. Okay, so we've seen the left support levels on the daily chart of where uh, the potential support levels could be. So let's just not confuse things. So I'm going to remove the Fibonacci on the daily time frame and just use this Fibonacci on this 4-hour time frame to establish support and resistance levels. All right. So we have 23.6%, 38.2%, but these are not lining up with any. Okay, this one is actually lining up with pretty decent level here. So we can see price reacting of this level of 14,210. Pretty, not exactly, but pretty close enough. So this could potentially be the next support level here. So okay, so sometimes it's good to zoom out to get to appreciate where price action has reacted strongly off certain levels. Okay, and then we can zoom back in and do our analysis. Right. So for Nasdaq, okay, for now I've put the the close from last week as the first support. Is price going to find support here before breaking through and going higher? I think today obviously is going to be a quiet day once Europe markets close. So then tomorrow we'll see the full swing of action with full volume, right? With UK markets back online as well as, of course, US markets joining them later on tomorrow. Okay, so this is for Nasdaq. We've had a nice gap up due to uh, the debt ceiling agreement. So do take note of this immediate support and resistance levels as well. Okay, and then we'll quickly just go to oil before we go back to gold as well. Okay, we'll just WTI oil. Okay, so crude prices. Okay, so let's just see on the daily chart first. Okay, so we've done the Fibonacci retracement uh, on this downward leg of the move. Okay, so we have we are running it from here to this point because it depends on your broker feed, right? Some broker feeds don't have this spike on 17th of April and some may not have this, but okay. So, but let's just be consistent and just use the extreme ends of this move and identify potential points. And I think there's also a retracement done here as well. Okay, go to the 4-hour. Right. Okay, this was a retracement move done here as well. Okay, so we have a nice trend line in WTI oil as well. So we've seen oil prices gap up at the open today, but have started to pull back. So do take note of this ascending trend line here, which sits just above the first overlap support. You can see here price has reacted off it a few times as a support and resistance level, indicating this should potentially be a major support here should price break below this ascending trend line. Okay, so in terms of Fibonacci retracements on this downward leg of the move, we have the second resistance at 61.8% Fibonacci retracement. Is there any other pips that line up well? Okay, we have the 50, so let's just keep 61 and 50 for now. So although price has reacted off it previously, I think it's still just good to keep it on here so that we are aware that not only is this strong overlap resistance, but it also lines up pretty well with the 50% Fibonacci retracement. Okay, okay, for uh, crude oil, do look out for the API and EIA inventory data. They are both published once a week. API data usually is released on Tuesday, but because of Memorial Day, I'm not sure if there's any changes to the date and timing for that piece of information. And EIA data generally is released on Thursdays. So the last week we had huge drawdown surprises for both API and EIA stocks. So what this means is when you have more than expected drawdowns in inventory levels, it typically signals that demand is increasing, right? So when you have that uh, continuous drawdown in crude oil inventories, that means demand is still strong, and we can expect gold oil prices to move higher, right? Generally speaking, that's what we can expect. And also because on last week as well, 25th May, we had the Russian oil minister making a statement regarding no further production cuts by OPEC plus. So because of this news, that this is why crude oil prices corrected very strongly on 25th of May, Thursday. Prices pretty much fell 3% overnight or during the day, and but they've now found support, and together because of the potential debt ceiling resolution, we can probably see crude oil being supported, crude oil prices being supported together with inventory drawdowns as well. Okay, so that ceiling outcome is positive for oil prices because it means that the US government will avoid a technical default. Technically, they won't fall into default and they will not have to shut down their government as well. Although it may be just for 2 or 3 days, but any potential uh, government shutdown would have an impact on services and economic activity. So hence, crude oil prices may react negatively to any potential fallout from the debt ceiling negotiations. Okay, so do take note of some of that. I guess the news events that could potentially uh, gyrate oil prices, as well as the API and EIA crude oil inventory data, which should be released on Tuesday and Thursday, respectively. Right? Okay, so this is crude oil prices. We'll go to gold. There's also a request for Aussie dollars, so we'll squeeze that one in as well. Okay. Um, right. So let's go back to gold again. Okay, but before we go to gold, it's also important to see how the dollar index is trading, because as we know, the value of the US dollar and combined with the yield on on US government bonds has a major impact on oil prices, on gold prices. So if we see the dollar index rising rapidly, and we also see the US 10-year bond yield rising as well. So if you look at US 10-year as well, it's risen very sharply since middle of May, right? It's gone from as low as 3.37% to as high as 3.85%. And similarly, if you look back in the dollar index, right, around the same period, they've both risen very strongly in tandem. So when you see strong moves in the dollar index together with accompanied by rising bond yields as well, then this is definitely a very negative outcome for gold prices as well. So as you can see, oh wait, sorry. So as you can see here, so 10th May onwards roughly, gold peaked at 2045 per ounce, and it's been in a clear downtrend since all the way down to 18 May, and then it consolidated between 1980 and 1950 for a couple of days before finally breaking through that level as well. So do take note, gold is still in a very bearish uh, trend, and because of the rising dollar and rising bond yields as well. Okay, part of the fundamental reason for that is because of the core PCE in price index that was released last Friday, 26th of May. Okay, the PCE is the Personal Consumption Expenditure Price Index. It is basically an inflation gauge, and this is one of the gauges that is closely watched by the Federal Reserve. In fact, it's actually their preferred measure of inflation. So what this latest data point revealed was headline PCE index and the core PCE index both show inflation creeping back in and accelerating, right, on a monthly and annual basis. So what this means is uh, the Fed is likely to raise rates again in June, right? And this actually started back when the CPI data was released now almost a couple of weeks ago, right? So because of that, the core CPI reading didn't is not retreating as sharply as the headline CPI reading. So this is why we've seen a strong uh, demand for US dollars, and we've also seen why bond yields have started to rise rapidly over the last few weeks as well. So this is an environment which is very negative for gold. All right, so let's just see. I think we can see there should be a ascending, descending trend line as well, roughly for now. Okay, oops, we have this descending trend line. Let me just zoom out a little bit. Okay, just for those who have not, who didn't catch the pre-market analysis today, uh, we also were covering where the major resistance areas for um, gold is. So basically between 2050 to about 2075 roughly. Okay, this is an area where we have seen immense selling pressure for gold, so do take note of this, although we are very far away from this region now. But do take note that potentially in the future, if gold prices were to rebound and they start approaching the region of 2040 to 2070 dollars per ounce, is very likely we are going to see immense selling pressure coming back in again. Okay, so let's just go back onto the daily time frame. Okay, so do take note of these levels here. And go, let's just look on the 4-hour chart. Okay, so we have the Fibonacci retracement on this downward leg of the move. So we have an intermediate resistance level coming in at about 23.6% Fibonacci retracement, lining up with a 23.6% Fibonacci retracement level, which is at about 1948. And we have the first support here. So as you can see, since last Thursday, gold prices have been ranging between these levels of first support and first resistance. And because the dollar uh, value, the demand for US dollars is still stronger, so I think the buyers for gold would be to the downside here, right? Or it might just range. Although, yeah. So do take note that the dollar index and bond yields are still rising. So gold is likely to be pressured. If it can stay within this range, that's fine. But I think potentially it could break below this first support over the next couple of days. Okay, so we'll just round off with uh, Aussie dollar. So we'll just go back to the Aussie, right? Okay, so let's just look on a daily time frame first, just to see if we can see where we are. Okay, so as expected, right? Since middle of May, the last few weeks, 3 weeks, dollar has risen rapidly. So naturally, all the other currency pairs are going to react accordingly. So we've seen this uh, Aussie dollar hit as high as 68.10 roughly. It has dropped to about 65.50. So it's dropped almost 300 pips, right? Roughly 300 pips over the last 3 weeks. So when you know dollar index is rising bond yields are rising, and you also see inflation concerns surrounding core CPI starting to gain traction in news headlines. It generally means most of the other currency pairs are likely to start pulling back. Or in this case, for the Aussie dollar, obviously will start pulling back. Okay, so we have done the Fibonacci retracement here. Okay, so we've done this Fibonacci retracement here to identify support level. So we have done the expansion basically. So on this upward leg of the move, we've done a Fibonacci retracement, and what we're looking at here are the expansion levels, which are more than 100%, so 127 and 161. So we can see that these expansion levels also align nicely with the overlap support, horizontal overlap supports here as well. So you can see price has rejected off this level at 65.07 back in October, and now it's finding support here as well. A very strong support here again now. So because we had identified this Fibonacci expansion level previously, and also it lines up nicely with this overlap support here. When price came down to this level, we can expect that uh, price to probably stall around here. So this, if you were shorting the Aussie dollar, you're likely to be looking to exit around this level of 65.10. Okay, and now the Aussie dollar has been one of the stronger currencies today. Now, whether this continues to do so, it's going to be uh, and also we have some data coming up. Okay, so we have also the RBA governor, is it Philip Lowe? I think it's Philip, right? He's speaking. Yeah, he's speaking tomorrow, not tomorrow, on Wednesday, 31st of May, 7 a.m. GM. Am I on GMT time? Sorry, let me just. Okay, no, wait. Just let me switch to GMT time so we can be consistent. It's easier for everyone to check their calendar. Right. Okay. So, sorry. Okay. So on Tuesday, 11 p.m. GMT, we have RBA governor speaking, and shortly followed by the inflation data as well on Wednesday, 31st of May, 1:30 a.m. GMT. So if he is hawkish and if CPI data prints or comes in hotter than expected, we may see Aussie dollar continue to be bid up as well. So do take note that of the immediate support and resistance levels for the Aussie dollar. So we just zoom in onto the 4-hour time frame. We can also do a Fibonacci retracement from this for this move here, downward leg of the move. Okay, we see the candles, price action of the candles match relatively closely to the trend line. Let's just see on a daily time frame how does it look. Okay, it's pretty decent, not the best move down, but I think it's still pretty decent and good enough. So let's pull up all the fibs and see where are the potential resistance levels as well. Okay, so we have the 23.6% Fibonacci retracement, which is close to the previously defined first resistance. We also have the second resistance lining up close to the 38.2% Fibonacci as well. So for now, we can just keep 23 and 38. So we have a combination of overlap, uh, horizontal overlaps combined with Fibonacci retracement levels on this downward leg of the move to identify major resistance areas. All right, so do take note of that. So if there were to be some relief rally in the Aussie dollar, it is likely to push up towards 65.75 or 65.80 before it finds some major resistance around here. Right? Okay. Yeah. So this is what we have for today, and so okay. So apologies for the technical issues at the start. We had some technical issues as well, and Cassandra was supposed to be here today, but unfortunately she couldn't make it. So Peggy and I were just have taken over today's session. And just before I close off, do take note that we have uh, uh, key economic data coming out of the US. So we have labor market data coming out starting on Wednesday. So we have JOLTS job openings coming in at 2 p.m. on 31st of May. We have ADP numbers at 12:15 p.m. on 1st of June, followed by unemployment claims at 12:15. And then, of course, we have the big one, non-farm payrolls coming in on 2nd of June at 12:30 p.m. So just to general description, just to give a general overview of what we can expect from this data. So if we continue to see strong labor market data, that means we see strong job openings, we see lower unemployment claims, and we see higher ADP non-farm payrolls, and of course the BLS, Bureau of Labor Statistics, non-farm payrolls coming up on 2nd June. If all these numbers indicate uh, or print higher than their forecast, then it shows that the US labor market is still very resilient. There are no cracks appearing in the labor market, which allows the Fed to continue to keep rates elevated, if not even continue to raise them in June's meeting as well. We have a FOMC meeting coming up in the third week of June, I believe. So do take note that a very strong labor market report is likely to push the US dollar higher towards the end of the week as well. And also, since we're talking about the June FOMC meeting, there's a tool that you can use. If you just type in CME FedWatch tool into Google, it will generally be the first result that comes up. So this tool helps us to measure the probability of what the Fed is going to do. So as you can see, the next Fed meeting is coming up on in 16 days, so in less than 2 weeks. So what was previous? Okay, so interest rates are currently held at 5 to 5.25%. Okay, so the upper band is at 5.25%. So previously, over the last few weeks, the probabilities for a pause was much higher than a raise, right? So basically, markets were pricing in that the Fed was going to keep rates steady for June's meeting. But you can see that has drastically changed as we've seen core CPI and core PCE data showing inflation re-accelerating. So which has now raised the probabilities of the Fed raising interest rates by 25 basis points to bring it up to 5.5%. So do take note, there's still very strong demand for the US dollar, as evident in the trend line as well. So we have fundamental reasons and technical reasons to believe that the dollar index is still in a bullish channel and is likely to remain elevated. All right. I hope this has been a great session for all of you. Thank you everyone for your requests. And also, again, once again, sorry, we do apologize for the technical disruptions at the start of today's webinar. All right. Okay. Thank you everyone. Have a good trading week. And yeah, do take note of the key economic events that are coming out for the rest of this week. All right. Thank you everyone. Take care and see you at the next webinar.